Thank you so
Yeah.
much. God, how many times did I ask you to do this?
I was gonna say we probably started talking almost a year ago, and it's
Yeah.
probably well overdue.
Well, yeah, thank you for being here today. And it's the first time. Well, no, we've talked on the phone, haven't we? Or on Skype or something, haven't we? Or has it all been, like millennials communicate texts and emails and everything else? Help an
Yeah,
old
well,
guy out.
well, you're probably the eldest millennial I know.
I'm not a millennial.
I
I'm
know.
a
I'm just kidding.
yuppie, but millennials don't like to talk. They'd rather text.
No, we
So,
spoke on the phone probably like 6 months ago, but started probably just chatting online
okay.
around a year ago.
So, I'd like to start off with your entree into the financial markets and what was the catalyst? What were you doing before? And tell us about how your trading journey began.
Yeah, that sounds great. And thanks again for having me on. It's great to be on Face this morning. So, growing up, I was always a math guy and always
Okay.
interested in the markets. My first work, I got into sell side M&A and capital raising,
Okay.
specifically in technology and financial technology. As I did that for many years, I just started getting pulled back into being interested in the public markets after working in the private markets for a long time. Just slowly got interested in it by checking stock twits and FinTwit, and eventually got into trading penny stocks, which I think is how a lot of people who are just starting getting traded kind of get into it from a first try. In addition
How
to
did
just
that go?
just horribly.
Okay.
So it was,
Usually, okay, that's probably the common answer because,
yeah,
what the modern equivalent, I believe, is to penny stocks, altcoins,
uh,
be because they have nothing to do with the intrinsic value of the coin and of the company. It's all about IR, investors relations, and that people actually go out. How do I know it? I did IR for a little while.
yeah,
People actually go out and they give away their currency is their stock, right? So they could give free trading or restricted, and or cash, and they pay people to come in and buy the stock to create volume.
yeah. So that's exactly
Yeah,
that
dog
sounds
and
exactly
pony
what I
shows.
think
Yeah.
I was seeing as well. And I was learning underneath a guru at the time, and it just seemed like he was likely front running a number of us, and only the fastest could really get in on the jump. So the strategy just wasn't working for me. I'm sure there's some people that it works for, but what the strategy just wasn't working for me. And the guy teaching me really didn't care and just wanted my money. So it just felt like a huge scam. So after that first attempt, I had to basically reset and figure out, okay, well, what style is going to work for me. Ended up finding a new mentor, and improved over the course of years, learning a new style that was more conducive to buying low and selling high, not necessarily buying high and selling higher. So
And you stayed with equities during this next go round with this mentor?
yeah, so I stayed with basically trading stocks, and also leveraged ETFs. So just
Okay.
scalping kind of in and out is the style.
Okay.
So I also ended up moderating for him for years,
Oh,
uh,
well,
and
who is
worked
it?
under his service. So he doesn't go by a name, and we kind of had a falling out because
Okay.
as I was working with him, his service started breaking down, and I would always talk with him and try to figure out how I could help him do more, because I thought I liked his platform, but it just became pretty inconsistent, and
Okay,
the
you don't want to say
tech
who it
issues
is.
just
That's
broke
okay.
down. Yeah.
All right. So next.
So yeah. So then, with kind of issues on his site, I kind of realized I should just really be doing this myself. I just ended up doing a lot of the moderating myself with a few others. So I found Guru Haven and started working with them almost a year ago, and teamed up, and I'm running my own service on their site. So
Okay.
um,
As far as trading goes, Kobesy, your second mentor, technically based, and I've seen some of the calls you've made. I've seen some of your charts on Twitter. Was it books? or any other mentor that taught you how to trade technically and had an influence on what you're doing now?
Definitely. So he had an influence technically. We would basically be looking at live charts daily. And then just also from the, I guess I would say broader FinTwit community, kind of following folks over the years and getting a sense for, uh, things to look for, whether it be, I like doing trend lines, and then there's also, key price support and resistance levels, and then Bollinger Bands, RSI, MACD. So stuff that, everyone uses, just looking at different time frames and figuring out kind of works best for you.
So you're pretty self-taught.
All 100% self-taught. So
Okay. So, some people, are fortunate that they didn't have to go that way. That's the long and winding road. I believe, here's my belief, is that you can't learn experience. It only happens with the passing of time and living through adversity. But you can learn from the experience that might help you avoid some of the landmines they already stepped on. Do you agree with that?
100% agree. So
Okay.
I think what I learned from just trying to get into it and trading penny stocks, that was, when you're a new trader trying to join a community, it's hard to tell whether or not things will be transparent. And just finding someone on Twitter doesn't necessarily mean that they're actually doing what they're doing. So wanting
Right.
transparency in a community was big for me.
Okay, community is big for me. I'm a big believer in community building and masterminding. Why do you like being in a community?
I just think it's great when you can interact with other people, and I think that when you're seeing other people's ideas and chatting with people more frequently, it's only going to improve your idea. It's either going to push your limits on what you view on a certain trade or a chart that you're looking at, to really make you be able to either defend it or see the other side and be able to flip. I think removing bias from charts is critical. So
that's a pearl.
Yeah. So I loved seeing people that have other ideas than me and chatting, so that I can kind of see what the other side of the trade looks like, just so I'm not missing anything. So I think it's really important. A lot of people, I think online, or especially, or the chart looks like this, it can only go this one way. Well, that's not necessarily true, right? So you've seen it a million times. You have to have a plan for if it goes the opposite way. So it's I think being in a community helps you see more ideas, and helps limit confirmation bias or recency bias.
Okay, so I see you have a PowerPoint here. What's the next slide? Are there slides or charts?
No, so this is the only slide I prepared, unfortunately.
Oh, okay. So
no, I'm kidding.
what are you seeing in the markets here? Oh, there's your setup. Okay.
Yeah, so
close to another recession.
Yeah, I thought we'd kick it off. I think a lot of people, the question they're asking right now, and what I wanted to focus on the presentation today is, how close are we to another recession or a major crash in the markets? So, and based on my research, the answer is yes, we're pretty close, getting close. And I would personally be pretty surprised if the powers that be didn't crash this thing before the U.S. election next year.
Okay, so you think there's a Fed conspiracy to get knock Donald Trump out of office?
I'm not sure if it's directly the Fed, but it obviously would be influenced through them. But I think that there will definitely be. Yeah, I think folks were caught off sides in 2016. You'll be able to see that through the way the bond market was positioned.
Not Carl Icahn. He bought the S&P's limit down on election eve.
Well, that's why he's one of the pros. So
yeah, well, I bet Carl Icahn also kind of knows before there's going to be a tweet. What do you think?
He could. Yeah. One stock I always liked trading with. I think he's heavily involved with some of the rent-a-car companies. I always found it fun trading. I believe it's Hertz. He's been in.
Leave the driving to us. O.J. Simpson running through the airport before he killed his wife. Anyway, so all right, so a lot of people are talking about this being a megaphone pattern, and one of the patterns I teach, it sure looks like a 3 drive to me up here. I guess the question is, and have you seen this before? That red line you have at the top for a 3 drive, and we just experienced it in Euro Pound. Could we have a throwover? What do you do when you're playing? I call this a return line. The trend line is the uptrend line. Any uptrend that you have, I mean, it goes all the way back to 08. You have an uptrend, right? So that little line you have up there, how do you handle a throwover if you're trying to short it and it actually breaks out to the upside above that red line?
So I actually have a few, I'll actually get to that point.
Okay.
Back a few slides on that, but
All right.
I think with regards to knowing if we're close to another recession, I think all the necessary items are in place. You know, we have extended valuations, record debt levels, and buybacks, you know, ever increasing. You see it, slowing economic data coming in every week. The stuff out of Asia this week was pretty terrible. And then you have tariffs, which I think has been accelerating all these, you know, issues and global growth around the world since it's slowing trade. So I think that's sort of been is a very slow trigger. And then the record debt levels and buybacks create the possibility, if the Fed doesn't handle things well, once the downturn starts happening, to allow the recession to potentially turn into something more like a depression. So, and I have a few questions on this chart too. So can the Fed, central banks, extend the business cycle? I think it's a very natural process. And I think that in 10 years into a recovery, and technically, I think it's one of the longest expansions in history as of this month. So it's been an amazing run, obviously. And then is a rate cut in June bullish? I think everyone's kind of thinking about the FOMC at the end of this month, and I actually be curious to see what you think. But I think that you know, policy execution might prove to be a little bit more tricky than.
What do you mean by that? So they cut a quarter. What's the execution part of it? The statement?
Yeah, so I think that the market's obviously looking for something closer to 75 over the next few months, and the odds of a 50 basis point cut keep increasing. The bond market's saying they certainly could. So it's who they want to disappoint, really. Do they want to disappoint the bond market, the stock market? It just seems like that's the thread and needle at the end of the month, and it'll be a lot contingent on what they promise. I think once they start cutting, I'm not sure they'll necessarily be able to stop. And they could be seeing something in the data that we're not, that seems worse. I think the U.S. data is still coming across fairly strong, but maybe they see it coming, more of the effects of Europe and the slowdown globally coming here in a much faster way.
What about them having one more scapegoat and solution, and that would be sacrificing the dollar, because the stock market is their cash cow for tax receipts. The bond market is the government would have a hard time servicing debt with 4% yields now, and a weaker dollar could make things look okay in nominal terms. Do you think that's a possibility? There are a lot of dollar bulls out there talking still sharply higher in the dollar. And it is possible that what they're going to have to do is have a direct intervention. You're probably too young to remember currency interventions like the Plaza Accord, but I'm kind of thinking that might happen, Kobesy.
Well, that'd certainly be interesting. I do think the dollar, once they start cutting, will probably retreat to the 93, 95 area at a minimum. But I just don't think that it can. I don't think it'll go much lower than that, just because you basically have going on in Europe. I mean, I think it's somewhere close to like 60% of the Dixie is Euro USD. Right. And I think Europe is not going to get better. And I think there's a reason why they brought in Lagarde.
What do you think the reason is?
The whole zone is probably going to have issues, and they brought in a deal maker. There's going to be so they're going to continue
restructure.
They're going to have to restructure the whole thing. I think they're still going to do massive, QE. So I think it'll only get worse. So, but I think they brought in her to do more political motivated, and
I like her hair color. It's like mine. Yeah. It's like
That makes
So
sense.
you know, us gray-head, silver-crowned people have a lot of wisdom.
Silver Fox, yeah.
Yeah. So why don't you tell us why the 61.8 fib level is so important to you?
Yeah, so some of the technicals on this chart, the fib retracements here, I call out, and the 61.8, particularly important as it shows up a lot in nature. For any of the new traders listening, if you're not familiar with Fibonacci sequences, they're derived from this thing called the golden ratio, which is found in nature and used to maintain balance. And it's funny, I think the 61.8 shows up a lot. You see it, for example, when you look at beehives. I know there's a lot of traders on FinTwit that actually I think are getting into managing beehives, which is pretty funny. But a popular example is beehives, because the ratio of female bees to males actually ends up corresponding directly with the 61.8%.
Oh God, I moved to California because the ratio of females, at least Jan and Dean, promoted that there were 2 girls for every guy out here.
Yeah, no, that definitely works.
Not
Probably
that
more
I
so
needed the
LA.
edge. I
That's
didn't
more
need
so
the
down in
edge.
LA. I don't know about San Francisco.
Oh yeah, that's a little different up there.
Yeah,
Okay.
yeah, exactly.
So 61.8 comes in where at the 2150 level? Is that
Yeah,
2110?
12.2 thousand. So it's that was actually where the initial bounce back following the housing bubble, where we peaked out and then dipped back down and basically put in a bottom. So and then
Oh, okay.
looking at the upside.
1560 is your target long term then.
Yeah, then looking at the 61.8s to the upside, you can see we stalled out in 1516 at the 161.8%, and we're currently testing this 261.8%. So I think it's a significant level here. I would be
and the
I would be
eclipse this
surprised if we
week,
don't get
maybe I've seen a lot of important turning points on eclipses. So how are you playing it, Kobesy? Is it futures? Is it ETFs? Is it options?
Yeah, so I play it through a combination. I'm mainly trading the ETFs, tracking certain sector indices, trading the 3x leverage ETF off of that, and then also through
What
options.
sectors are you most bearish with in the ETFs? Could it be? Go ahead.
Yeah, I think my favorite is probably biotech coming into an election cycle, and it's really, the IBB and XBI have really lagged. You've seen a lot of biotechs who aren't getting acquired, who I don't think are doing well, or doing offerings, and you're seeing this become a trend. So I'm expecting going into an election cycle, and if the Democrats are somehow able to win, I think it'll absolutely get annihilated. So I don't think that necessarily has to happen for it to do poorly, but that's just one of the ones I'm more focused on.
So how with your outlook on the markets and possibly the economy, can I ask you how you remain optimistic and pouring energy into wanting to build a business that we might be entering a crisis of the kind of degree that you're talking about?
Yeah, I think that a lot of people are going to want help, and I think that the rise of passive investing is probably going to catch a lot of folks off sides once things really do hit the fan, and you'll see a wave of more active investing coming back. So I think playing that.
Everyone thinks they're a genius when things are going up forever. Is that what you're saying?
Exactly. All my money is in. Most people probably don't realize that most of their money is sitting in Microsoft going up. So it's it's. I think
looks heavy to me
want to
too.
manage. Yeah, I think people will want to manage stuff more actively, and I think that's something that you've seen. And hopefully,
that's already happened in 2000.
Pull out. So
in 2000, and then 2008, especially after 2008. But even after 2000, I remember after the dot-com bust, people started to say to themselves, Kobesy, you know what? If anyone's going to lose my money, it's not going to be a salesman who says I'm okay being in, 25% bonds, 35% stock. Yeah, I'm gonna make my own mistakes, and that increased after '08. And if this is a third go around, I could see that happening as long as people have money left.
Yeah, so that's what I think is likely to happen, and that's why I think communities like like ForexAnalytix, Guru Haven, and the likes are going to be important. I think because it's going to help a lot of people and be a place for people to come and learn. And And if they
Okay.
have been very inactive and complacent, a place for them to kind of learn and be more active about managing their wealth and money. So,
Okay, so unless you have another market that you want to cover, why don't you tell us about Guru Haven, where you've published some of my videos?
so I actually have a bunch of stuff to flip through here.
Oh, okay.
I'm
All right,
not
go
sure if
ahead.
that's all right. I don't know if there's a time limit, but
No, there isn't. Go ahead.
okay. How about I'll try to flip through some of these really quick, and you obviously can jump in with any questions. I think it'll probably take like 20 minutes or so if that makes
Yeah,
sense.
go. Sure, go ahead.
So, yeah, we're just wrapping up this slide, looking at the technicals on the chart. Obviously, we just talked about the fib levels. Other things to note: the Bollinger Bands were at upper Boley, so we're actually over it. This happened in April 19, right before May, and also in January 18. Those are the two most recent times. Looking at the trend lines, Dale, you pointed out we have these ascending magenta trend lines with some confluence around that
We're
bottom.
still seeing the original slide.
Yeah, do you still see it?
Okay, yeah.
Yeah. So if you look
Okay.
at right over here, you'll see a confluence of
Oh,
support,
okay. Yeah.
December low near the 50 MA as well as lower Boley, and the confluence of these two trend lines, one off of the housing lows, and also right at the peak of the housing bubble as well. So
Okay.
I'm expecting a drop. I would expect a drop if we were to get one in the near term to probably not be able to not go lower than 2,500 or so. I think we'd see an initial bounce back there. I think we could get a swift drop there if history is proven correct. If we get something similar to January of last year, October of last year, so. But I wouldn't expect a drop much lower than that initially. I think there'd be at least a dead count bounce there, and I think that 2,100 is still possible by the end of the year. Granted that for that to happen, things really do need to turn in the coming weeks.
Okay.
Looking at the NASDAQ, obviously, as I said, tech has been driving a lot of the moves. So when you look, a lot of people looking at S&P 500, they're obviously also looking at the NASDAQ. What's been the primary driver here? You have the FAMANG. I always put Facebook, Apple, Amazon, Microsoft, Netflix, Google. A lot of these have been driving these. And looking at the NDX monthly here, you can see there's massive divergence in play here as well, just like there was on the SPX monthly. We have a rising channel similar to what you saw here. The dot-com bubble is obviously very, very steep. We have a rising channel here as well. RSI in a very similar place, and also kind of having a rebound similar to what happened after the first warning shot in the dot-com days. And MACD also, I'm looking for another point to be disproven to basically say there's more upside in this market, maybe in a substantial way. I currently don't see it, Dale, but one thing I'm looking at is if these monthly MACDs recross and confirm, that'll have me concerned about a potential move, because that's basically what you saw as well in the 1998. You saw this on SPX, just to flip back onto this slide. So that's something I'm wary of and watching.
Great market tell for you, the monthly. So I think it's cool you use a telescope. I'm sure you use a microscope too, but telescopic views are really key to what you do when you drill down, don't you think?
Exactly. I think monthly, weekly, and daily are likely the most important time frames, especially if you're swinging. If you're trading intraday actively, obviously, I like to look at the hourly. Is probably my.
Yeah, I go from the monthly to the tick chart. I'm kidding you. I look at the monthly, I get my bias, and trade a 5-minute chart.
Yeah,
that would be crazy.
That's the right way. You gotta start zoomed out and then zoom in, like you're saying.
Okay, buddy.
But yeah, so I think recent history, a lot of people have recency bias because they don't necessarily think maybe something like the .com can happen.
Wow.
But right now, the technicals are set up most similarly to the .com bubble.
Yeah, even your midpoint, almost looks like a pitchfork. Your midpoint magenta line is 50% or more.
Yeah, right. So I think at a minimum, you'll see, the bottom of the 2015, 2016 range when we had that deer market.
Yeah.
So, and I think that could come faster than a lot of people realize if you get something like this.
Yeah.
So it just depends. We'll have to see if if all this stuff actually does cross over the next time, and we fail on this support trend line that it's held for years since 2011.
Yeah.
So
Okay.
zooming
Nice
in
luck.
again, I mentioned Microsoft. It's by far the largest stock in the world. It's 4% of SPY, 11% of QQQ, 20% of XLK. If you look at that text, even more tech specific ETF, QQQ is kind of like XLK, but with the Amazon kicker.
Okay.
So, and not only 401ks are in here, everyone's in here. The central banks, one I check decently often is Swiss National Bank. It's one of the more powerful central banks. They have 2,500 positions, 100 billion under management, and 9 to 10% of it is in Microsoft. So, and
Wow.
almost 30% of it is in the FAMANG names. So, looking at this weekly Microsoft chart, you can see we have an ascending wedge, declining volume, divergence in play, not confirmed since there's no MACD cross, and potential for this week to bearish engulf on the looking at the candlesticks. So obviously this is an important name.
Great look.
Yeah, and tonight is very important for this name.
Earnings?
With that earnings, yeah.
Oh man,
it'll be
interesting. You're even better than I thought you were.
I'll take that as a compliment, Dale.
You're my trading warrior brother.
I know.
And I love your looks, and I've retweeted your stuff. But really nice presentation.
Awesome,
okay.
Thank you. Appreciate that.
Okay, buddy.
So yeah, if, I think the implied move tonight. You correct me if I'm wrong. I think it's like 3.5. So
you mean that's what options are predicting at 3?
Yeah, exactly.
Okay.
So
yeah,
I think that we can maybe see a 13 EMA on the weekly test, 50 daily moving average, and we actually closed yesterday below the 13 daily moving average. So that's the first time that's happened. I think all of June or since early June.
Predicting earnings. Let me ask you this: I try and really pare down positions, but before things like a Fed announcement or an NFP, do you take positions like in individual equities like Microsoft prior to such a big earnings report, or do you try and react to it or stand aside?
I more so try to react to it, stay on the side, because I think that earnings is
it's roulette.
As close to gambling as you can get.
Yeah, isn't it binary?
Yeah, so I mean, every once in a while, I think if there's a great setup, maybe the monthly, weekly, and daily are all overbought. Maybe you could try for, if something's really, really, really run up into earnings, you could try for.
I would only do an option,
but
yeah,
I wouldn't ever try to build a position into something like that. But even playing put options, I mean, it's gambling. So if it goes the wrong way, next day it's 0. So at least you define your risk and know what you're doing.
Options are like relationships. 90% of them expire worthless.
That's a great thing.
But I think you're part of the 10%, bro.
So
why don't you move on?
So that'll be interesting to watch Microsoft tonight. Very big. And so what to look for on a pullback here that I'm thinking that we're going to get soon. We have a large ascending wedge, and this is SPX weekly here.
Okay.
Will be key to watch to see where we break out of this. Do we break to the upside, kind of like you mentioned, it's possible, or to the downside?
Right.
I'm seeing a pullback. Maybe we'll test the 50-day moving average here on SPY, circa 2920, 2900, and I think that you could also probably test the bottom trend line there. Since it's only touched twice, I think that you'll probably get a reaction. I would think you'd want to see a third touch of it to firm up the trend line more so, and then probably a back test of the prior topping area from last fall and what we had in May. And if that were to fail, I think that's when you kind of forget a major breakdown, and you have that move that I was talking about towards 2,500, which is also where the 200 EMA on the weekly is, and that held pretty well in December, as you can see on the chart right here. And then it also served as support in early 16 on that dip as well.
Okay.
Before we moved up before the end of the year. So that's something to watch.
Nice roadmap. Take a screenshot, everyone.
Yeah, exactly. And then, and if you think about how a bullish scenario would take place, and I haven't drawn it here on the chart, but if we break, 30, 30, 30, 50 or so and start getting significantly above this upper trend line, you'd have to, and you see a back test and a hold of it, you'd have to think that there would be more upside for the market. And while I don't think that's not my primary case. I think that if the Fed were to start cutting and the data did turn around, they could be inflating the bubble even more. Right. So that's something that you have to think about. I think that they're cutting into economic data that's going to continue worsening, which is typically how a recession is officially starting. So, but
a lot of people don't realize the lag time between what the Fed does and how long it has impact. I mean, we're still doing QT until September, right?
Yeah, exactly.
So the effects of QT, which has been going on for a long time, and the series of interest rate increases are just starting to have impact now.
Simple Trends a lot about.
Who talks about that?
I talk with Simple Trends a lot about that. He tracks the.
He's a Fed watcher.
Yeah, he's an avid Fed watcher. So it is pretty incredible that they're just stealthily doing QT. So they're still theoretically, removing liquidity from the markets. Although the Treasury does a lot of work, I think, to offset that. So it's
Mnuchin's a busy guy now. He's talking crypto. So okay, buddy, what do you have next?
So we just reviewed the major charts, SPX, NDX. It's important to kind of look at a lot of other key drivers or markets that you could basically view as an indicator to help determine, when and where this major move will happen. So something that I want to go through this morning is Bitcoin, the VIX, small caps and transports, the bond market, and crude oil. And I post a lot about these actively on Twitter and StockTwits as well. And I'm always talking about them actively in Guru Haven. So going through these, first we'll look at Bitcoin. I don't trade crypto, so just to call that out. But since it's and that's because I think it's a pretty controlled market. It's owned by a handful of people. It's very concentrated. So at times it can be less liquid, and you can get hit with a whale selling, as they say. And I think it's no coincidence that you see Coinbase crash every single time it's going down. So it's I use it as an indicator. Maybe someday I'll be a buyer, but it's right now it's looking at the chart. You can see we basically topped out here recently at the weekly closing high that we had following the first major drop, following the blow off at the end of 2017. This 11.5 thousand has really held as strong resistance, as you can see here. Look at these wicks flying over it as well. So that's something I've been looking for. And you also have a divergence on the weekly and also in the daily in play for the first time since the last parabolic rise. So mainly just tracking, I believe. And I think you guys were just talking about this earlier as I joined. So I think we're gonna see a test of this 7.6 level, and what happens there, I think, will be pretty critical for if this rally has legs, and if you're looking to get long, I think that's a good place to get long. You could probably try to add at 6 if it were to get much lower than that. I think that we could be going back down much lower, so something to be aware of. But I think it's a good sign of risk appetite. You saw in January of 18, November of 18, drops in liquidity signaled by Bitcoin. You can see that there are significant breaks of, this was a break of the 10,000 support. This was a break of the 6,000 support. And they both happened basically a week before the market started having more downside as well. So I think it can really be a good gauge for risk on, risk off.
Very interesting. Market tell that leads the market.
Exactly.
Give by a week. That's
by a week on those, yes.
Okay.
So it's something. If you see Bitcoin fall out here and start heading towards 7.6, I think it'll be a sign that we could get a decent pullback here. I think if it holds 7.6, it could be somewhat telling. So it's something to watch in coming weeks.
Okay.
Next, looking at the VIX, large moves by the VIX have typically come, as you can see on the chart, from these descending wedges.
Yeah.
So, and MACD is pretty close to crossing something I'm watching now. There's no divergence in play right now. Typically, there's been bullish divergence.
Well, would have had to make a new low, but there was divergence.
Could make
at
a
the
new
lows.
low.
When I look at the VIX chart and I put out to some of my mentees, it's a fourth higher low with the market making 4 successive higher highs.
Yeah, it's kind of hard to believe. I don't know if many people realize.
I mean, if that's not a message, that's not a message, I don't know what is, right?
Yeah, I was in a big reaction the past 2 days off of the magenta trend line again, which is
2-week reversal if we close up here too. Okay, so nice looking VIX. It's a time bomb. Is it as much of a time bomb as it was in 2018 when people were short VIX products? Are people as short? I'll never forget that. Are people as short now?
This is something I talk with the other gurus on Guru Haven a lot about, and people that get into COT data more so than I do. But the levels are extreme, so I think that there could be a potential move like that. I think that because of the
why
way
are people buying insurance when it's cheap? You buy insurance on your house not because you hope to collect, but because you hope to protect.
Exactly.
Wow, I just made that up. You don't hope to collect, you're hoping to protect. And with the VIX down here, protection's cheap, right?
Exactly,
Insurance on sale right now.
Exactly. So I think if we see a break of the 15 was support for a while and really did hold until it dropped off in early June. So I think if we clear 15 and then you have the 200 daily moving average at 1580, well, if you get over there, then I think we can really have, if we close over, we can have a good chance for some increased volatility to come. So that's something that I'm watching. And I would say, Dale, that you probably were a songwriter with how you're making everything rhyme so easily.
I was, yeah. I ever hear the group The Hands of Time?
I was going to say in another life, but you actually are. So,
The Hands of Time, yeah.
That's awesome.
Yeah, Old Orchard Junior High. We won the Battle of the Bands there.
You'll have to send me some YouTube videos.
Okay. Oh, I have some recent ones. I do a pretty good Elvis. Anyway,
Awesome.
So, all right. So small caps. So Russell been lagging dramatically in the last several months.
Yeah, and people, why watch the small caps? I think they're a solid indicator on how America is doing, as they're not large, they're not multinational. They were the leader up in 18 all the way through September, and they turned down a month before S&P 500 did, and broke out of this ascending wedge that they had, which was a sign then that there was weakness to come. So it's they're still down 10% off the highs, while meanwhile the S&P 500 was able to make new highs. So looking at the chart specifically, we closed below recent support yesterday. The recent low was 154.22. We actually closed below it yesterday. And this has really been a tight one to watch. Trying to figure out which way it's going to go. But my bias is that we come down, we'll probably test this blue support trend line. We'll probably see a bounce there, similar to what I'm expecting in SPX. See a bounce and then have it basically fall out, and you basically have a potential for something like this to happen. I believe.
Okay.
Something similar to the fall.
A beautiful symmetrical triangle.
Yeah, I think you'll like this one. So the transport's also a big one to watch, obviously, and there's a lot of news yesterday. CSX, railroad company, was down big on earnings. The commentary from their CEO was a pretty staggering, and he's someone that's worked in the industry for I think it was 20 years, and he said he's never seen. He can't explain the slowdown. He's never seen something like it. So it's transports are a good gauge of trade and economic activity globally. Historically, have worked to worn, and that's why the Dow transport theory was coined. But you see people on CNBC and people asking, is this still really a good indicator? And I say, let's just look at the chart. So I mean, there's a pretty big blue head and shoulder pattern with a descending neckline. It's about as bearish of a pattern as it gets. And have we seen this before? Flipping to the next slide, it's exactly what we saw not too long ago, right? Yeah. So you can see that recency bias probably has people thinking that the setup doesn't really mean anything. Meanwhile, this was the exact setup we had 6 to 9 months ago, and you can see technically if you break a descending neckline on a head and shoulders pattern, it can get pretty ugly. So it happened right before the huge fallout in December for transports. Yeah. So
nice look. A lot of triangles popping up, symmetricals. It's interesting when you get a lot of the same formation in different instruments. It's kind of a theme.
Yeah, it's something I've actually been seeing across a lot of them. Netflix, for example, had a big one that obviously broke down out of it.
Everything Amazon compressing for resolution.
Right. Yeah. Okay. And most of them come to a head, later by October. So, and we'll see where we are there by then. But typically, seasonally, October has been pretty rough the last few years. So, something to think about in terms of seasonality and timing wise. Okay. But interesting to see that on the transports, this very similar pattern is potentially playing out here. Okay. Something definitely to watch. Zooming into transports, I like to look at FedEx. They're one of the larger transports. The CFO in the last earnings cited, global trade and industrial production slowing as reasons that they've had issues. You can see that there is a massive potential overthrow here to get to that 261.8% fib level on this chart. Had a ascending wedge in play, which it technically broke down out of earlier this year, rose out of, and then was able to get back below and has recently actually just back tested a few days ago. And the chart basically had a 15% bounce off of the lows, which is pretty significant. Back in the in 08, 09, they had I think closer to like a 30% bounce here when we had a similar signal. So we've had a pretty significant bounce here. And you can see what I'm looking at. The main thing I'm looking at in this chart is you have a very rare signal in terms of the 13 EMA now crossing the 50. The last time, so this has crossed in July 19, pending a major reversal this month into that month end. That'll be confirmed. Okay. The last time this happened was in July 08, which that basically was a huge red flag then. And the stock went down 60% over the next 9 months. Then if you were to see something similar here, you'd basically be seeing FedEx go back down to this major support level down in the low 60s. And there's also fib support.
That's where we were in 08.
Exactly.
Okay.
So something I'm seeing, and it's I think it's worth watching because obviously it's huge for trade and in the global economy. So if you're looking at transports, a good double click in is to look at FedEx.
Great tip.
The bond market, I know you've been all over this, and me and you have discussed kind of thoughts here, but could it be calling equities bluff? So it's the bond market, separate market, and much larger than the equity market, but correlated from an asset allocation standpoint. Looking at this 10-year Treasury index, the monthly chart we have here, MACD crossed negative in June, which is pretty rare in recent history. You can see it's happened 3 other times. This is the 4th. The other times it has crossed have preceded some pretty significant periods, the bear markets of the dot-com and housing bubble, and then the deer market of 15 and 16. And we just had a cross happen now. So. Okay. And also on this chart as well, similar to the FedEx monthly, you have the 13 and 50 EMAs close to crossing. And the last time that did that was in November 17. So something definitely to watch for 2050 or 2.05% is the support trend line I have. We closed below it last month when we closed at 2%. And you can also see lower Bollinger Band is opening up to the downside, which is generally a omen that this thing could be going lower. So I think that once the Fed starts cutting, you could see this really, if they have to start cutting, I think they'll keep cutting, and you'll basically see this go down.
Okay.
Test this other support level
Nice
near 1.4. So.
Okay, retest of historical low yields.
Exactly.
Okay.
Looking at the bond market, I also throw copper in here to see if it agrees, since it's also a pretty good indicator of economic health.
You know, Dr. Copper got sued for malpractice.
Yeah, the bulls aren't happy. Yeah.
He was impersonating the bull market.
Oh my gosh. That was a good one. I like that one.
All right. Okay, go ahead.
I have to steal that. So looking at this chart, just looking back 4 years. So this is basically going back to July 2015. You can see the bond market the bond market historically, since it's much larger, is thought to be usually right. And global elites, I think, got caught off sides by Trump. They didn't see it coming.
What's bigger than the bond market?
I'm not sure.
Currency market.
Oh yeah. Sorry, I thought you were going to make another joke.
No. Once in a while, I'm serious.
No, yeah. Currency market is obviously the largest. So you can that's something definitely worth watching. We could have a whole presentation going through currencies. Obviously, you guys cover that every day on ForexAnalytix. So it's but yeah, looking at this one, copper was the early signal back in mid 2018 that something was wrong. It really fell off and didn't participate in this high into the fall period. You basically saw SPX catch right back up to copper by the end of the year.
Yeah.
Right now, copper has not.
That was my tell. S&P is rallying to new highs, and copper only retracing 38%.
Yeah, exactly. So I mean,
back,
and it looks. If you look at I post copper charts on Twitter, Drew Ravenoff, and it's looking like it's potentially bear flagging. We'll have to watch to see if it holds. Maybe Dixie can put a floor in it. It's unclear, but it's definitely there's definitely a big gap here, and maybe copper comes up a bit, but likely it would coincide with stocks also coming down.
Okay.
And then looking at the 10-year, it's even far bigger, a larger gap. You can see that the 10 years implying SPX could be down by, or should have been down near 1820, based on this chart. And it'll be interesting to see if that's something that's possible in the near future. But there's definitely red flags. So I think if you don't think there's anything out there that's signaling something's wrong, it's there's definitely the bond market and commodities with copper. We'll go into oil lastly here in a second. And obviously the other indices we've covered here that are presenting red flags.
Yeah, you're presenting a very strong bear case. If you were an attorney, the jury would go your way after listening to this.
Oh, that's great. Hopefully, it's not a jury of the 12 bears of FinTwit. So hopefully, it's. I think that's all that could be wrong.
It's Peter Schiff. He's on the. All right. So anyway, go ahead with this.
All right. So last chart here. I haven't posted actually. This is a new chart. I haven't posted a weekly crude publicly. Update the daily pretty frequently for everyone, all my followers. But I think crude is really important to watch. I think the correlation between S&P 500 and crude has kind of dwindled. It really was tracking pretty well late last year. You can see it had the same type of sell-off, and you would argue it was far worse than the sell-off in stocks. Crude you can kind of trade, and actually the way I think about trading crude, Dale, and I don't know if you've thought about this, but it's kind of a way to double your money, and if you're trading stocks, because the percentage moves are typically
bigger.
Bigger, yeah, exactly. So something to think about if you're into oil or trading oil. So, but geopolitics, weather have made it very tricky in recent weeks. So we've been bouncing around. I think I try to drown out that stuff. What's going on in Iran, what's going on in the Gulf with the weather and hurricanes, and
Yeah,
so it's
you're with the bears looking for $30 or take
yeah. I
out
think
the
that it looks. I mean, this chart just doesn't look bullish, right? So I mean,
right.
it's you back tested a major channel.
Yeah,
That's what we have in here.
yeah.
If you're not aware, the exact high was
It was 61.8.
6.6. So I
Oh,
mean,
okay. Yeah,
devil's high, and also yeah, exactly what you're saying
yeah,
in terms of a fib retracement. Or
yeah.
to throw that on here. But yeah, I think it's pretty. And market makers, I think across all markets, just like to mess with people. So I think
Yeah, they messed with me. I was shorting rallies back to like, I don't know, 58 and a half, 59 and got blown out. So,
well, the
yeah,
opportunity.
I've been in an IDK mode, but yeah, the bear case is definitely building
Yeah.
again this week.
Yeah, and this 60-70 level, I don't know. I don't really see it called out too much, but I think it's actually really important. I post on the dailies. It's an important, near important fib level as well from the recent fall from the highs last year to the lows in December. But this 60.7, you can see, was a closing resistance back in 15. And you can see it's kind of where we're stalling out now. We overshot it, um, which led to this upside and the back test of the ascending wedge here, ascending channel. And now we've basically retraced back down, putting in a new trend line here potentially. Looks like we're rejecting the 60-70 level. If we bearish engulf, which there's the chance this week that the S&P 500, NASDAQ, crude, all bearish engulf. We'll have to see how today and tomorrow go.
Yeah.
I think that'd be a pretty ominous signal for potentially more downside next week. We'll have to see. But
Next
looking at
week,
the chart,
the Mueller crash, huh, bro?
oh, I haven't really been thinking about the bullish stuff, but maybe
Yeah,
markets that'd be pretty silly in my opinion. But
yeah,
but I
yeah.
think a 52,
What
50
isn't?
test will probably be coming on crude to test that trend line and lower the lower, maybe even the lower bully at around like 51.30. And if that were to go, I think if you lose these lows, if you're trying to be patient shorting crude, if you lose these lows, that'll be the sign that we're probably going to do something like this.
Okay.
So we'll have to see. So yeah, that's basically all I wanted to cover today, and thought maybe leave something for us to discuss next time. Obviously, you mentioned the currency markets, largest market in the world, U.S. dollar, important to watch. Gold, if that breaks out much higher, is the Fed losing control? So we'll have to see what happens there. I don't think it's quite the generational buying opportunity in gold. I think it could obviously go higher here. I think it's basically been breaking out of what looks like a bull flag, and miners are really flying the last week. So it's that's something that's definitely interesting to watch. Boeing and Deutsche Bank, and I think these are two problematic companies. Boeing is probably the most problematic in the U.S., the largest company in the Dow, and I think there's huge problems there. And but it's hard to be a short of Boeing because you have to remember the whole. Boeing is actually a small percentage, or a decent percentage, even though small, of U.S. exports. So they have a lot of government contracts. It's really backed by the U.S. government. So if there was a lot of wrongdoing, and I think it's blatantly obvious that there was with regards to the 737 MAX, it's going to take a while for it to play out. But on that chart, looking at long term, it's that's one of the more wild charts, similar to Microsoft, where it's just vertical. You look at a monthly, you could think you're looking at Bitcoin. So it's I think I won't be surprised if in a year or two some of the bad things that they've been involved with, putting passenger safety at risk, comes to bite them, and that stock gets cut in half, if not more. Deutsche Bank, that's already been really struggling, obviously, and that's pretty well known what's been going on in Europe. They're obviously important to watch. Economic data, do manufacturing, housing, GDP, stuff we see over the next few weeks. Does this all continue to worsen? It's something that we definitely have to watch to see if any of this is transitory. I personally don't think it is, as data was starting to roll over prior to the trade war starting almost a year ago. So I think it's part of the natural cycle, and I think cycles matter. then if you're unclear what could make the recession really hurt and what could really lead to the potential of a depression in coming years, something that we haven't maybe seen in 90 odd years, it's corporate debt and corporate buybacks. I mean, they're the main issue. So they're at record levels, and for example,
basically they have leveraged position on their own company.
Exactly, and and I don't think they're buying near the lows either. So I think that it's going to end up being a huge waste of money. You've seen CapEx pull back for corporate buybacks, and that's not helpful in terms of if you're not spending money to invest in your business.
That was a tax cut, financial engineering.
Yeah. So the tax cut obviously gave a huge bump in the general markets because of the value it created for these people to use. But I think they've primarily used it for buybacks, which a very artificial way of supporting a company's stock, because you're basically, it's short-term gain, potentially creating long-term pain. So because you're not investing in the future growth of your company. So, but so that's those are maybe things we can discuss next time, reviewing a bunch of other stuff.
Okay.
And we've kind of already talked about Guru Haven, but that was going to be the last stuff I talked about. Dale, do you have any questions or anything you want to talk about with regards to
no,
kind of the stuff I presented?
No, it was a great, very compelling presentation. One of the best bear arguments I've seen in a long time, backed up with a lot of evidence.
Thank you very much. Hopefully this page loads. But I just wanted to basically end with if you like hearing me talk, which I know most people don't, you don't have to listen to me talk. You can chat with me online on Guru Haven more actively if you follow me on Twitter. So it's I think an awesome community we're forming. It's basically, we run it on a workspace. Here's an overview of it right here. We have 4 of the gurus. I'm one of them. Dale, I think you've been in here before, maybe checked it out.
No.
But Crush the Market out of Sydney, Simple Trends, another American, and Trade with Hedge out of UK, London. 4 of us currently in it every day, chatting with a bunch of people, and running our own services, and then also have free rooms as well. I'm the only one that currently is charging, so everyone else is free as well. So it's a lot of free content on the site, and I offer free trials for a week or 2, so easy to get on and chat with me. So it's what's
the mission?
I think the mission is just I think if what's the point of winning if you're doing it alone? The mission is to help other people fight the 70% of volume that is algos, and actually kind of figure out how to trade in and out and be able to make
great mission.
90% of people lose 90% of their money. It's because the whole system is rigged against the
I don't know about that stat. I've been hearing it for 90 years.
Yeah.
So anyway, but
so
your mission is to serve others.
Exactly.
While serving yourself, not just being self-serving.
Exactly. So it's
okay.
What's
I think the best way for people to follow you on Twitter, check out Guru Haven? Why don't you give people your contact information?
Yeah, so you can follow us on Guru Haven. Our Twitter handle is Guru Haven HQ. We put out a weekly newsletter. Dale's on it, a frequent guest contributor on it. We try to talk to we basically put out content from Guru Haven, all the gurus on it, as well as all of our good friends on FinTwit. We'll have guest appearances. Dale's on it all the time. So that's something we put out weekly. You can look for. We post that on Twitter very early in the morning on Tuesdays. It comes out early to our members on Monday night. If you get on the site, it's free to join the site. You can join the site by just going to our website, www.guruhaven.com. That's kind of the overview on us.
Okay.
And I think that it's important that communities and folks like ForexAnalytix, Guru Haven are popping up. So I think it's with what is to come in the future years. I think it's going to be even more critical to have a tight knit community, really have a good understanding of what's actually going on, because a lot of it's gonna appear, it's gonna come across as crazy, but it's, some stuff, nothing new. Things have definitely happened, like what's set to happen, before in history, as I pointed out on the charts. So.
Okay, well, I want to thank you for being here, and I wish you much success with your company, Guru Haven, and the pips fall down and rain down on you like a wave, like a tsunami,
Oh,
just
I hope so.
overtaking
When it
you, and
rains, it pours.
yeah, taking over you and everyone who your words touch. And Kobesy, glad that our paths crossed, and wish you all the best, my
No,
trading
thanks,
warrior
Dale.
brother Kobesy.
It's been absolutely great to connect and chat with you more and more. So glad we've become good friends. So
Yeah,
it's
and good luck on your scenarios, and we will have you back, see how things play out, Kobesy. Again, that's going to be a wrap. Everyone know how to follow Kobesy, and remember, most of all, regardless of what happens in the markets, don't just count your pips, count your blessings, and we'll see everyone to wrap up the week, TGIF tomorrow. Adios, and thanks for your attention. And thanks again, Kobesy.
Thanks, Dale.
Adios.